welcome to the latest Ticker TV interview. Today we're delighted to be joined by the Nativo Resources Non-Executive Chairman Christian Yates and Nativo CEO Stephen Birrell. Nativo Resources are a Peru-focused developer and soon-to-be producer of artisanal gold and silver at the 50% owned Tesoro Gold Concession to the south of Lima, and with a second revenue stream to be generated by cleaning up polymetallic tailings dumps in Northern Peru. Welcome, Christian. Welcome, Stephen.
Hello. Good morning.
Hello.
Fantastic. Now, you became a Christian. Let's kick off with Christian. You became Nativo Resources in September, and before then the company was known as Eco Energy, quite a well-known energy explorer. Why don't we start by getting you to tell us the story behind the change of name and the change of sector, please, Christian?
Yes, certainly in 2023, the board of Eco, of which I was a non-executive director at that time, decided to exit our oil and gas interests in southern Argentina. The reason being we didn't feel there was any potential value creation there or opportunity to make any significant returns to shareholders. And at the same time, following on from lockdowns, there was quite a big creditor position as well. So we were offered the opportunity to exit to our joint venture partner, who was the operating partner, take some cash for shareholders into the company, but also retain a small interest, a remaining interest of 5% in those assets. That happened in 2023. In November 23, it was agreed as well that I would step up as chairman of the company, replacing James Parsons, and also Stephen Birrell, who'd been working with the company since the beginning of 2023 on identifying new strategy and opportunities for Eco as was, stepped into the role as chief executive. So Stephen and I really took the helm at the end of 2023, really with a clean sheet in terms of looking at new opportunities that we had. We had to identify opportunities whereby there were fairly low barriers to entry. We didn't have huge Capex or capital to deploy at that time, but where we could see early cash flows and the opportunity to build reserves for the company. So we embarked effectively on a new journey at the beginning of 2024, and that took us to Peru.
Okay. And now you've taken that London listing and you've used it to create a 50-50 joint venture with a local artisanal gold and silver miner already operating in Peru, as you mentioned. And if you could explain the economics of low-cost access to a mining concession for us, that would be very interesting. How much money, for example, have you put in to kickstart the mine? You said it was low barriers to entry, and how much profit comes back to Nativo? Just tell us the economics of how it all works.
Just at a high level, as I mentioned, we identified some good operating partners potentially in Lima and Peru in early 2024. Went out there and did initial meetings and visits in March, followed up by meetings to mining areas and looking at various opportunities in terms of primary mining, as well as tailings deposits in northern Peru in April this year. And that resulted in the formation of a joint venture with a company called Bako, headed by now someone who's now our general manager in Peru, Eric Pegot. He is a miner by background and a lawyer by training, and has established experience of primary mining, polymetallic, gold, silver, as well as establishing processing plants. And his fellow shareholders are well-known and fairly high-profile individuals, business people in Peru. So we started with people with experience, but also, most importantly, they had access to an existing concession with the right permits, about 550 kilometers south of Lima in Arequipa region, known as the Tesoro mining concession. So we formed the joint venture in July. We committed initially to initial investment of $750,000 over several months. We went to the market and had several placings between February and most recently last week to raise more money, which we have principally deployed to kickstart mining activity in Arequipa region at the Tesoro mining area. We've sunk one shaft on one vein called the Bonanza vein, and preparation to start mining commenced in August this year. So with the complete change of strategy away from oil and gas, coming back to your question about why the change of name, we felt, and the repositioning in the natural resources mining sector in Peru, we felt it was good to make the full break with the past and actually identify more clearly with our future strategy, Nativo Resources seemed an appropriate name, and a good ticker. NTVO works well as well for investors. A rebranding of the company to reflect the change of direction.
And that joint venture, it's a 50-50 joint venture. Do you get 50% of the revenues back out of that?
Correct. The initial deal was they provided the concession and the expertise and local management. We provided some of the capital, but they also provided the concession with the permits, I should say. Very important. The artisanal mining sector is coming back to our point of low barriers to entry, and it is a more light touch regulation, regulated at a regional government level rather than central government level. It is restricted by the volume that you can mine or process each day, restricted to 350 tonnes a day. But that's well within what our objectives are with the current price of gold in particular, which is our main initial focus. That still makes it a very attractive potential opportunity for us.
Okay, and let's introduce Stephen into the conversation there. Greetings, Stephen. The Tesoro Gold Concession, was it previously an artisanal mine? And if so, how much gold resource has already been extracted, and at what grades? And what sort of history has the place got? And to what extent does that define what you know that you've already got there now to mine?
Donald, the area has a rich history of gold mining. Artisanal mining extends back to the 1990s, and we have records that show since about 1998 there was about 60 tonnes a day being artisanally mined, and up until about 2010, 4 million grams of gold has been produced. We get those records from a company called Dynacor, who have been active in the area and are still active in Peru. Dynacor is listed on the TSX. So our concession, the Tesoro concession, that was originally explored and appraised between about 2004 and 2011 by a Canadian company called St. Elias Mines. So they did the surface mapping, they did the sampling, they did some geophysics, quite a lot actually, and they did trenching, and they explored the existing mine shafts of the artisanals, and they took samples and they analysed them. And so the using that data and knowing that artisanals are already functioning within the greater concession, because our concession Tesoro is about 926 acres. So from the data we've identified about 5 vein systems for exploitation. So that includes Bonanza, La Dorada, and 3 further vein systems. And these are mesothermal vein systems which extend northwest, southeast typically, and are full of quartz and gold. And as I said, originally appraised and explored by St. Elias, and that was after the artisanals who've been active throughout time. And then it was owned by Hochschild Mining, which is a big UK-listed Peru-based mining company.
Now, let me take you to a recent announcement which talked about high-grade assays on vein material recovered from Tesoro. Talk us through those recent results, Stephen, and explain to us how they help de-risk the project, because it does sound like there's a lot of good news to come.
So we had a qualified person. We have a very experienced geologist in the area, in the country. He prepared a QP report for us and suggested that within our concession there's about 150,000 tonnes of vein material to be mined, with an average grade of 15 grams a tonne. So that was the starting point for us. Now, as we prepare the Bonanza mine to mine, what we found is that we take samples every day, and we send them off for analysis. So far, we've measured up to 27 grams a tonne in particular areas, and we've got an average, and it's a moving average of between 6 and 12 grams per tonne. And that has an indicated recovery because we've done the metallurgy, has an indicated recovery of 90 up to 93% when processed. So these results, as we prepare the shaft and the galleries, are really the mitigation and support to what we thought we had from the geological data we've already looked at.
On a Peruvian level and on a world level, how do you rate those grams and those assays? Those seem to be quite healthy numbers to me.
They're hugely healthy. There's two categorizations to look at in the scope of big miners who take years and millions of dollars to define a resource, do a feasibility, pre-feasibility, feasibility, bank feasibility, and then FID, final investment decision. You'll find they're typically mining 1 to 5 grams a ton, but for a huge resource and something they've de-risked. Artisanal miners, they prefer to stay within the 6 to 30 grams an ounce, and that's where we are. So our particular deposit is we're focusing on high grades, so we're in the ballpark. You know, we're not out the park, but we're in the ballpark. So our 6 to 12 grams a ton is really good stuff.
And what would the life of mine be on your artisanal mine on Tesoro with your different veins that you've been telling us about?
So life of mine, the life of mine is. Well, let me step back to something I said earlier. They've been artisanally mining at 60 tons a day since 1998, and it's still going on. So we don't typically look at a life of mine. That is a big miner mentality. We're artisanal. So we will continue. We have 5 vein systems. Those vein systems extend, the oxidized zone extends down to a couple of 100 meters beneath the surface, and it can extend kilometers in the northwest to southeast direction. And so what we do to mine it is we sink a shaft, and it's semi-mechanized. We sink a shaft maybe down all the way down to 200 meters. We're at about 22 meters at the moment, so we've got a long way to go down that vein. And we follow the vein, and then we dig galleries along the strike of the vein, and we mine those out over time. And then as we mine out each block in a cut and fill type of process, we then open a second shaft and a third shaft and a fourth shaft, and then we go deeper, and then we go to the second vein and we repeat, third vein, repeat, fourth vein, repeat, fifth vein, repeat. So the first couple of years for us is going to be building up to a capacity of in excess of 60 to 70 tons a day of material with those average grades. So the first period for us is, and I know I'm not answering directly at life of mine, but the point is, first 3 years we're going to build up that tonnage, and then we'll keep extending and sinking shafts and building galleries and accessing new veins to keep production at a steady tilt.
Don't worry, you answered it. The answer was life of mine is not an important metric for artisanal miners. Fine.
That's right.
Happy to hear that. The sale of the first 30 tons of ore from Tesoro to a producer is imminent, with regular sales no doubt coming thereafter. So talk us through the process of getting it to that producer. How much money do you get back from that 30 tons of ore, do you think? And how does that revenue get reinvested into your development of mine?
Well, our plan is to establish our own gold ore processing plant. That'll need extra capital. So prior to that, we're going to sell to a third-party plant. That's our first step, sell to a third-party plant. So we need offtake terms. Typically, a plant will take 30% margin and promise you a 90% recovery. Now, we know we can get better than 90% recovery from our vein material. So right now we're negotiating terms. We're trying to improve on the 30% margin they're going to take, and we're trying to convince them that we know they're going to get better than 90% recovery. Those are, when they offer us 90% and they know they're getting 93%, in our terms, they're taking their angel share. So we're negotiating those terms.
All
And
sounds
once
very
we've done
wise.
that, once we've established the terms, they'll come and collect the ore from our central mine, our central camp. They're going to weigh it. They'll weigh the ore. They'll then assay it, and then they'll make a payment within about 5 days based on their expected recovered gold. And that's stage one. Stage two is we're going to have our own gold ore processing plant, and we will recover that 30% margin.
Let's bring in Christian. What are the next steps for you and Bako to undertake at Tesoro, Christian?
Simultaneously, as Stephen alluded to, we have very exciting, on the 14th of October, we announced that we'd secured an option on some land to develop a processing plant, which already has some permits in place, and it's very convenient. It's within 30 kilometers of our Tesoro concession, because that is important, the convenience of that. So logistically, that makes a lot of sense. Also, moving to processing, as Stephen alluded to, allows us to capture the 30% we currently would pay away to a toning plant that we look at using over the next year as we ramp up our production from later this year. So I suppose that's where we're sort of focused primarily with Bako at the moment, down in the south in the Arequipa region as well.
Now, I'm absolutely fascinated by your processing plant. So, and even very roughly, how much Capex do you think it might actually cost you to develop and build?
Yeah, some of the recent capital raise as well. We're assisting in the design and planning work in preparation of the for the plant. Some of the current site owner had put some initial infrastructure in place already. So, he started down that journey a couple of years ago, but it's been on hold since we came along. We estimate that we require $1 million to get us up and running. Timing wise, the planning preparation will take us through to Q1 2025, and with a bit of luck, we'll get into construction Q2, Q3, with production at the processing plant commencing in sort of Q3, Q4. That's the sort of time frame we're working to at the moment.
But presumably you're hoping to self-fund some of the development of that.
Yes, absolutely. And actually forward fund some of that from local financiers in countries, so we won't necessarily be looking to come back to shareholders or investors to raise all that money. This is ramping up. That's why ramping up production at the mine is so important. It's a game changer for us. Mm-hmm. Once we start getting up to sort of 30 to 40 tons, then 50, then 60 tons, at the sort of grades, it's all about chasing the grade, as Stephen indicated.
And what sort of time frame before first ore at the proposed smelting plant?
At the processing plant, probably Q3 next year. But that's, I think we can also deliver from our own production at Tesoro. But the other thing that we're doing as well is working with local artisanal miners around the Tesoro concession, where we can actually take in their ore as well and put it through the processing plant. So we will capture the 30% that they will pay away. But
you get the 30% and the angel share.
Yeah, correct. Well, that's, yes. Very important, that bit. Yeah, we don't want to give anything away.
No.
And the money really, just to be very clear about what the revenue we're generating from our initial mining, and also is very much at this stage, we are reinvesting in the business locally to accelerate our production.
Okay, back to Stephen. And as Christian alluded to, the second proposed revenue stream for the business is to extract gold and silver from various polymetallic tailing sites to the north of Lima. So for those who don't know what tailing sites are, or even what a polymetallic one might be, if you could put that in context, and then tell me what your plans are.
So a polymetallic tailings dump comes about from an original mine, which might have been mining for 10, 15, 20, 30, 40, 50 years, and they process for their copper, lead and zinc, but they don't usually recover material amounts of gold and silver, because it's a different process. It's a very different process to recover copper, lead and zinc than it is gold and silver. So those mines work in tandem, and then at the end of their life they have they have this tailings dump, and in modern environmental legislation, these legacy tailings dumps don't actually comply with modern legislation within Peru. They don't have the impermeable membranes underneath them. They're not sealed off. They're open to air. They're open to river. They're open to leaching and external water. So we've identified about 5 million tons of deposits from what, in fact, were large family-owned mines back in the day. And they're all localized around Huaraz. They're all within about 60 kilometers of Huaraz. We're in discussions with 3 tailings owners discussing options for the cleaning and recovery of gold and silver. We've done initial analysis of these 7 dumps, or we've had access to that analysis. And initially, what we're seeing is these dumps have a weighted average grade of about 1.8 grams to 2.2 grams of gold equivalent. So the gold equivalent is when you merge gold and silver, you divide the amount of silver you're going to recover by the ratio between the price of gold and the price of silver. It's typically 85. It's 85 at the moment. It's been between 60 and 90. So, and that comes out with a gold equivalent, so that you know when you sell it, you're going to get, you know what your revenues will be. So
do you see the opportunity for a quick revenue win here, or 2 or 3 quick revenue wins, which you can then feed back into the development of Tesoro?
So the quick revenue win is the mining. Although it's hard work, it's early stuff. For the tailings dump, we will need to do a feasibility study for each of the tailings dumps. But the good news is it doesn't cost a lot, because we're not drilling. What we're doing is we're scooping up dirt across a small area, because it's a defined area, the tailings dump. It's an acre to 2 acres, not hundreds of acres. So we will do a feasibility study, and we'll also do detailed metallurgical analysis, so we know what the optimal processing plant needs to be to maximize the recovery. Now, historically, you'd be lucky if you got 45 to 60% recovery of gold and silver from these kind of deposits. But today's technology is allowing us to get above 85. And, that's a big gain. So we're going back in, we'll optimize the processing plant through the feasibility study. We'll define a resource. We'll centrally locate a plant, and then we'll bring all of the dirt to it in trucks. And it's very simple stuff. All you're doing is shoveling dirt into a hopper, which is your processing plant.
So
and
Stephen,
we'll maximize the tonnage.
Do you see this as a medium-term win then?
It's a medium-term win. First-term win, Donald, is that we will define a reserve, okay, which we won't do for the ASM mining. So
but that reserve goes onto your balance sheet, isn't it?
That will go onto the balance sheet. It'll be a JORC or an NI 43-101 standard resource report. It will take an FID, and then we'll go and establish production. So it is a medium term, but with 5 million tons in our sights, and the expectation that as soon as we sign the first couple of agreements, all of the people that have substantial tailings dumps will come and say, would you do a deal with us? So, 5 million tons is over 20 years of mining at 600 tons a day. It's a long time. It's a lot of resource, or it's a lot of material. So we're really excited about that. And of course, it's not primary mining, so it's got a lower carbon footprint. And we're cleaning up legacy tailings within communities who don't really want them to be there anymore. So there's a great community project, nice ESG project, and money to be made for everybody. And of course, we'll be employing the locals. The community will be our workers, our managers, our security, our infrastructure supporters. So this is a really positive project, and one of the things that actually quite excites us about it.
Okay, so a win-win project, really.
I would think so.
Back to you, Christian. Final round of questions to you. If I could ask you about the Capex funding requirements for your projects, you've just raised 486,000, as you told us, in your most recent placing. I wasn't aware of the previous ones, but that's all very interesting. So where does that get spent? And you'll need further funding to scale the business. So what will that funding package look like? Just tell us, give us a look at the costs as you go forward.
Yes, I mean, as I alluded to the earlier, the funding we just raised at the moment primarily is being used to actually further work on the Tesoro gold production with mines, develop mine extension and debottlenecking, also looking at developing the shaft down the next vein, the La Dorada vein as well, that I mentioned earlier. Also, as we will be using some of those funds to, now that we've secured the option on the site for a processing plant, we will be starting work on designing and pre-planning for the construction of that site between now and the end of the first quarter next year, so that enables us to further that. We will look to, as Stephen talked about, some of the tailings deposits. We're looking to secure some of those by year end, entering formal agreements with some of the owners on that. Discussions have been ongoing for some months now. We hope that will come to fruition before the year end. And at that point, then we will start some detailed analysis and sampling of some of those deposits to enable us to get to the financial investment decision point. And then we require some working capital for the management overhead of running of the company in the UK as well. We have outsourced most of our corporate functions, everything to Peru, to Lima. We've really keeping our cost base down and focusing on deploying most of the money we have directly towards furthering our mining activities, because that's where we're going to generate future cash flows, and that unlocks everything for the future and value creation for shareholders.
Okay, talking of the future, my final question to Christian: where do you see Nativo, NTVO ticker, where do you see Nativo in 2 years' time?
Well, I think given our plan, I mean, we've done a lot. Steve and I we've been quite swift and bold in terms of decision making. We don't hang about. We're also very hands on in terms of going out to site, making sure it is what it is, what it says it is. We're driving this project. Both of us are fully committed to making this work. So where we'd like to be and where we think we can be on the Tesoro primary ore mining concession is extracting around 60 tonnes a day of ore. We think that is sustainable, and extending further veins down into further veins. Once we've got to that level, sustaining that level of extraction on a daily basis. At the processing plant, we would hope that it would be up and running and processing up to 350 tonnes a day at the processing plant as well. That requires a lot of work. As I said, obviously we're only going to deliver 60 tonnes, but actually gathering ore from other artisanal miners where we already have relationships and identified them as well. So that is a profitable business. As Stephen mentioned, Dynacor, that's their core business today. And then in the north, also on the tailings deposits, processing 350 tonnes a day. And we think that's really possible as well, given the 5 million tonnes of deposits that we've identified. So that's our vision for the next 2 years. We think that's achievable. And we're committed to delivering on that plan.
Christian and Stephen, thank you so much for joining us today on Ticker TV, and thank you for that insight into Nativo's operations in Peru. You give us a lot of detail there, which is perfect for investors. Thank you so much.
Thank you, Donald. Thank you.
Thanks, Donald.